Hey traders, Sam Shakespeare Company Live. How's everyone doing today? Let's talk a little bit about impermanent loss. This is where it can get you, and I want you to know how it can affect your account. Now, the bottom line is, if both sides of the liquidity that you're providing liquidity for, like if Dodo and BNB, if they both go up versus the dollar, then you're making money. You're not going to lose any money. But you will lose what's called opportunity cost, because there's a most likely you'll come out with a little less coins than you went in with. So it's usually, if you had held on to some stuff, you might have done better. But with the returns that you're getting here should make up for any impermanent loss you have, plus a whole bunch. That's the idea here. But there is risk in that. So this is what you have to learn to monitor right here. And I'm going to be creating in the software that I'm writing. It's going to be a little bit of time, guys, but I've already started. I'm going to be creating a little thing that will monitor this for you, monitor your impermanent loss, and it'll tell you what it is at any time. First of all, it's called impermanent loss because you can reverse it and get it to where you don't have any impermanent loss. It's possible. It doesn't usually happen, but you can. Basically, to have no impermanent loss, the exchange rate from these need to be exactly what they were when you got in. Now, they can both go up versus the dollar, fine, but compared to each other, if they stay exactly the same, then you get all your coins back. And that means if they diverge while you're in, but then at a later time they come back and get back to the same, then you're back, you're good again. So while these diverge from each other in value, that's where you're going to have impermanent loss. Okay, if they come back and you're able to get out of your liquidity tokens at the exact same exchange rate that you got in, you're going to have all your coins back. That's how it works. Say if Dodo goes up a ton and Binance only goes up a little, your reward is going to be, your value is going to be somewhere between the two, because if one goes up in value, the way AMMs work, you load up on the weaker one. Because think about it, you have to sell and buy on the other side of the spread. So if price is going up, you're selling because you're wanting to buy lower. So you're selling as the price goes. So if it keeps going up, you're selling, and you're accumulating the other asset. You're gonna build up an inventory in the weaker of the two, right? So I like these because I know Binance coin is a strong coin. It's very strong, so that's good. So we just get these riskier ones to do well, and we're fine. But here's where impermanent loss comes in. Now, first of all, I'm gonna point you guys to a resource, okay, for impermanent loss. It's a Binance Labs has a good paper on it, and this is a very good. It's not a complicated thing to figure out. It's pretty straightforward on how it works. And there's a chart here that'll tell you everything you need to know. This will explain why it's a thing, why there is impermanent loss. It explains and how it works, right? But there's a chart here that I want to show you. Here it is. This is your loss. And it's not horrible. It is bad if you have no rewards to make up for it, right? If the price doubles, okay, so say you get in Dodo and BNB and one of them doubles the other one, you're going to experience 5% loss in your coins, in your value on what you could have had, opportunity. It has to 5x to lose a quarter of the value. I mean, so there needs to be a 5x different to lose a quarter of the value. And this is just, if they both go up, that's just opportunity cost, right? Now, if one of them goes below the dollar, and there's a big change, then you could actually lose overall value. So if any of these coins go below the dollar and there's a 5x, you could be experiencing actual 25% loss in value of your stake. But remember, you're earning 400%, 300%. So it's going to take time for this to reach 5x unless it does it in one day. And there are some of them that may actually do that. There's some of them that may 5x, but that's why you diversify in many different farms. Okay, so you diversify in many farms, and that way if one of them happens like that, great, but if some of them won't do that, and you're going to be making 400% on all of them. So some of them will cause you impermanent loss. Think about this. What if this goes 5x compared to BNB, but BNB 2x's versus the dollar? Well, you're not experiencing loss. You're probably doubled or more your account. But the 25% is how much you would have had extra had you not farmed and just held the two assets individually. But remember, you're making those 400%, 300% returns by farming. Okay? Does that help give a very basic overview of what impermanent loss is? Because I think that's an important thing to understand, that this is your risk, guys. This is your risk. It's a paper loss. I mean, it's a real loss. okay? But it can be a real loss. You're actually going to lose your actual coins. So let me show you this part of it, okay? Let me show you how it works then. So say you deposit 1 ETH and 100 DAI, 2 currency pairs, right? And that gives you like 10% of the pool or whatever. Okay, so you deposit 1 ETH and 100 DAI. The pool has 10 ETH and 1,000 DAI, right? So that gives you 10% of the pool. Right, so you now have 10% of the pool because there's a total of 10 and 1,000. You've put in 1 and 100 to the liquidity pool. So you have 10%. Now that's a big number for easy math. We're only getting like 0.02%. So let's say that the price of just Ethereum increases to 400 DAI. That's a 4x. Ethereum 4x'd DAI here. So Ethereum was 100 DAI. See, they're equal. You have to put equal amounts. So 1 Ethereum is 100 DAI, but now Ethereum goes to 400 DAI. Okay, so what happens is the arbitrage traders will make the difference and balance it out. The ratio changes. There's now 5 ETH and 2,000 DAI in the pool. So the balance changes based on the new fluctuation. So your 10% share now, instead of 1 ETH and 100 DAI, is a half of an ETH and 200 DAI. Right? So you have more DAI than what you started with. That's the weaker one. But you have half as much Ethereum. So you lost some Ethereum, increased your DAI. That's how it works. So when you add up those values, this would have only been 400. But had this person just kept the 1 ETH and the 100 DAI, it would be worth a lot more. It'd be worth 1 ETH is 400 DAI plus the other. It'd be worth 500 DAI instead of only 400 DAI. So here it is. It would be 500. So this person lost $100 USD because the DAI is a stable coin. It's worth $1, right? So if you had 1 ETH and 100 DAI, then that means this is $100 and this is $100. So ETH worth 100. You're putting in 200. See, her dollar value is 200. So she made money. She made 400 instead of getting it to 500. You see? So it was opportunity lost. Now, if Ethereum went under the dollar, there would be actual loss. Okay, there'd be actual, you would go down in value. All right, so she would have been better off by holding in this case. But there's no rewards incalculated. This is just pure impermanent loss on money making. So the one solution to solve this impermanent loss is to give these really high rewards. Yes, exactly. That's exactly right, Ken. Ken says, so people coming into the farm pool have to contribute equally to the relative percentage proportion, right? Yeah, and that's the way the ratios are kept stable, 100%. So anyone that comes in has to provide equal amounts on both sides. They have to. That's the rule. It won't let you do anything else, right? And then there are arbitragers that rebalance the pool when there's an imbalance. So we don't rebalance it. That's not us. So there's automated arbitragers, and I think we'll be able to maybe get into that too. Who knows? But right now, this is the easiest way to do it. So that's a little bit on impermanent loss. Thanks to Binance Academy for this document. So I will probably go ahead and make a little video on this too that we can refer to. I just want to give proper credit to Binance for providing this because I think it's a really good explanation. All right, and it was just put out a week ago. This is how new this stuff is, guys. Look, 1 week ago. This is very new. We are in the beginning of something amazing, guys. All right.